Good morning, folks. How are you? All right, so I'm gonna make this real short. I've been all night, so we'll get into that later this afternoon. But the daily chart here, we were talking about lower prices all back here, drop down into our objectives here, and during the other short little reviews and whatnot, you saw me annotate this area in here, and there's a down close candle right there, and it has a gap to the left of it, so it's already been used to set up a bullish order block deep discount from where we were up here. Opening price is changing the state of delivery. On a daily chart, it's not going to just go there and stop. It's going to dig down underneath it a little bit. And we saw that happening here. Okay, so when it got down below consequent encouragement of this inefficiency, which is a bullish discount array, it's in a deep discount and it's a suspension block. So it has a volume of bounce at the top end and a volume of bounce at the low end. Its midpoint right here is consequent encouragement. You're going to get a bounce. You're going to get some kind of a pop. You're going to get some kind of reaction there because it's a daily chart. Okay. Um, Even if this thing keeps rolling lower, it's still worthwhile to hunt something in here. So just be mindful that that price level around 27,665 and a half or less, if there's something in that vicinity, it's usually something that's going to give you a nice pop, especially if time of day comes in agreement. Just remember, we were talking about this before the week started. It's going to go up there and then come down. Okay, so everybody else is playing catch up ball. We're going to go into a 1 minute chart. We'll get to all that stuff later this afternoon. Daddy's still cooking. So we have the market trading down into that lower buy side of balance, sell side of efficiency. Suspension block of this covered on the daily chart. So that's the full range of it here in the shaded gray area. And that's the midpoint or consequent encouragement. And notice how we started right out the gate at 9:30 open. We had this little bit tiny little move up, keeping relative equal highs here. So when this drops down like this, what do you think it's forming? What do you think that's forming as I teach price action? It's a market maker buy model. And right in here, we're trading down to an octant in here. So here's consequent encouragement of that daily bullish suspension block, octant, lower quadrant. And then we have a lower octant, then the low of the daily suspension block. So we're in a nice deep discount. I love when they do this. They give you 1, 2, 3. They keep probing, getting people to chase it, go lower. And we left the minor buy side liquidity pool here. So two things are going to happen. Number one, we're going to see price accumulate all of the engineered sell side liquidity here. And then they lay down a wick. Wonderful. Because I want to try to get in this area here around that wick. And when it starts printing potentially retail continuation patterns like a bear flag, which literally is like bubble gum, I just chew them up all the time. The idea of seeing this thing go higher even goes further in the odds of probability. So it trades softer, smart money reversal, low risk buy, first stage accumulation, second stage reaccumulation, run all the way up to this target here, which was my terminus for the trade for the regular trading hour session. Unfortunately, real life comes into the play sometimes, and it's very difficult to see right there. Okay, we'll keep it there right there, and it'll make sense later today. So there's the target I was looking for. Okay, and I was unable to sit with it. My wife informed me that your sister-in-law, who is a type 1 diabetic and newly married and pregnant, and she's deep into her pregnancy. So she's having complications with preeclampsia, I think that's what they said it was. Her blood pressure is really high. And I know this is important to you, but obviously we had to go and go rally around and see what's going on and provide moral support. So I wasn't able to watch and manage. So I recorded the entire thing, which I'm thankful I was able to do that. But the market's going to draw from down here up into old areas where it was a sell off or a premium array. So it was used as a bearish order block here. I'm sorry, bearish fair value gap here, and a bearish fair value gap there, and then makes a smart money reversal. I was trying to time it as we were dipping below the wick, the midpoint of that wick right there. Let me raise this up so that thing doesn't keep jumping up in front of it. So right there, that mid line right there. Anything below that or at that level is perfect entry, like perfect entry. But it rallies up. All these annotations were written as it happened. I gave you a sped up version of it because I didn't have much time. I had to skedaddle, get out of the house. But the uh, the sped up versions usually bring a whole lot of hissing and moaning, like, oh, he's speeding up because he's trying to hide something. So when I got home last night, I uploaded the slow real time version, no edited time. It's exactly how it would have happened. It's about an hour long, and I know 99% of you are not going to watch that, and that's why you're not going to learn how to do this properly. You're not going to learn it. You're not going to learn by 5-minute trainers. You're not going to learn by me seeing a market run perfectly like I want, and I speed up the video because I'm coddling your short-term attention span. Okay, you have to broaden your minds. Okay, you have to do that type of stuff and allow more information to come in. So down here, smart money reversal, draw towards the consolidation, the original consolidation. And then right above that, we have this. Okay, this is what I was aiming for. And I ended up taking off. I only had 3 contracts going. I was going to build it up, but my wife was on the phone. I could tell the drama was coming. So I just kept it what it was. But don't worry, Daddy's got something to show you later today. So here's the executions and the business down here. So right in here, look at that. Look at that entry right there. See that? It's below the wick. See that right there? It's probably random. And there's my little aggressive entry. I wanted to get in there and make sure that had something in addition to. So I built that up there. So 3 contracts. Again, you can see those prices. And then market rallied up, and I drew this out. It came up above it, came back down in. This wick went through it, and I had this annotation. I said, I want to show you without having to talk because I know I wasn't going to have any audio in the video. But when it came into this inversion fair value gap, I already had it typed out. Now watch how it delivers. And it gave me a little wick right here. So you know what that is. It's a mohawk. Okay. Look where the bodies are. The bodies can't even lay down or outside of this inversion fair value gap. That's bullish. So that's why I took the annotation and drug it right down there, keeping you in the same idea that watch how it's going to go higher. Because you can see where my objectives were. I changed 9:30 opening price for regular trading hours. Yesterday's opening price here at 9:30. I added next partial, so I wanted to take my second partial there, and then the last one would be here. Okay, I wanted to take one off here just to teach you all how to graduate into understanding market maker buy models, sell models. So there were smooth edges in here. When price went above that, there. Let's see if I can get this thing to show up. It's not working with me here. There it is. See it? Right underneath my cursor, right here. That was my first partial. And then right above here, minor buy side right there. And then finally, the wife said, we got to go. And there it was. So I said, just give me a moment. Let me hurry up and button up something real quick. Made a compressed version, sped the video up so that way you can see it. I screenshot, shared those, and there's the 9:30 price getting hit. And then this was left up there. Okay, so It goes to that price level right there, and that actually is the high of regular trading hours. So now I want you to understand something, children. This is the man buying the low and expecting and knowing exactly where the high is going to be at. Again, you see me do this on weekly charts. You see me do this on weekly ranges. You see me do this on second charts, daily charts, session highs and lows. Okay, there's something a little bit different over here. Okay, but that's going to be it for today because it's going to be very long-winded otherwise, and I want to get prepped for a long nap. And if I can get what I need to get done this morning and get some rest, I'll come back and show you all the fun stuff on the hard right edge that you can't see right now. Hint, hint, nudge, nudge.